Good afternoon, good evening. Welcome to the live trading session with myself, Giles Coxon. Hope everybody's doing well. Paul's not feeling very well today, so he's not going to be with us. So I am flying solo on the session. Okay, folks. Right, without Paul being here, let's crack on to the session. So, in the terms of fundamentals, the main driver is that President Trump has signed a proclamation to reimpose the 25% tariffs on steel and aluminium imports. He says there's no exceptions, there's no exemptions, and it's effective from mid-March, March the 12th. He said they're also looking at tariffs on cars, pharmaceuticals, and computer chips, and he's going to hold meetings over the next 4 weeks. They will be doing reciprocal tariffs over the next 2 days. So those who impose tariffs on the US will have tariffs imposed upon them. Trump also commented that tariffs on metals could go higher. At the moment, it's 25% steel and aluminium. And he doesn't mind if other countries retaliate. And he's expected to sign executive orders today at 8 o'clock UK. So there's going to be a lot of focus on Trump. And we've also got Powell speaking as well today. Now, Powell is due to be coming out 3 o'clock in the semi-annual testimony to Senate. So there's a lot of potential volatility
around geopolitics. Powell. Yemen's Houthis say they're ready to launch attacks on Israel if Israel resumes its attacks on Gaza, according to their group leader being cited by Reuters.
Okay. And we've also got the Middle East situation with that peace kind of deal that was being breaking down. So there's a lot of risks sort of out there. If you just look at the way markets have reacted, it's quite telling me. So first of all, in the bond market, we've seen a sell-off in bonds because if all these tariffs are going to come in, they're going to be inflationary. And that inflationary pressure means that the Fed's likely to have higher interest rates. So that's why we're seeing the bond market sell off and yields move higher. Okay, so we just keep an eye on that trend, like break and close above that, and it's indicating that US 10 yields want to start moving up to the 4.6 level. So we've got to keep our eye on that. But that's the first thing to know. And notice that yields are up across the world because that's inflationary pressure. So that's negative for stocks. Looking at the VIX, you can see it's sort of flat, but look, stocks, US equity futures are all down across the board. Euro stocks, FTSE, DAX, not too bad. FTSE's obviously a little bit down, but the broad outlook is that that's negative for stock markets on that tariff news. And with Trump speaking later at 8 o'clock UK time, there could be a whole flurry of tariffs coming in. So what does that mean for today? We might get sort of quite cagey price action. Now, if you look at the S&P 500 from a big picture, the things that you can see and that are quite notable, let's get rid of that, is this bullish piercing line. So you've got that overhead resistance that's broken, support, broken, support, and now we've got a bullish piercing line pattern with the close going below the prior, with the open going below the prior close for yesterday, and then yesterday's close above the halfway 50% mark of Friday's price. So that means expect dip buyers from a technical perspective. So fundamentally, pressures to the downside, technically dip buying. So it literally could go either way today. But the sentiment is more negative on these tariff news. Okay, but we'll see. The rhythm of the market coming into the start of the session is a slow trend down through the morning European session. We've had a bit of an acceleration to the downside on no particular catalyst, just the general sentiment that's out there. But we found quite firm dip buyers from this drop lower. Okay, so dip buyers can push it back above that 60-65 region, then that's just they're going to try and hold that level and maybe break up to the 60-71 before the US Open, but we'll see. Okay, but selling is the dominant force at the moment. The major levels to be looking at are marked confirmed value areas above and below price, and the next confirmed value areas coming at that 60.52. Just zoom out onto the hourly chart, just becomes a little bit easier to see. You can see we're in this big sort of support level around 60.57, which is a prior confirmed value area high going all the way back to January this year, and price has just sat in that sort of confirmed value area. And then we've got a developing value area up at the 60.76, and we've got a confirmed value area at that 60.70. So we're just sort of stuck in between these confirmed value areas for now. It is a slow trend down, but it's also quite range bound. If you look on the hourly chart, it's sort of, there's arguably this range from 60.76 to 60.57. It's certainly not an aggressive trend. It's like a slow trend down, and price trying to find a bottom down at this area. And even as prices move lower, there's been buyers up against that level. Looking at the important areas, you can see here some buyers got trapped at the 60.63. Price has moved up and is pushing lower. So sellers have got control for now. It's just a question of whether buyers can lean against this 60.60, 60.57 region. So important areas to know. Obviously, sellers are noted at the 60.73. We've also got sellers at the 60.77. So if we can push back above that level, then we're back into the developing value area high, and we can start to push forward. Anything underneath the 60.70, 60.75 region, we're looking for sellers to come back in. On the 15-minute chart, in terms of what's happening more locally, we can see we've got some sellers there at the 60.69. We've also got buyers trapped there at the 60.64, and we've got buyers trapped there at the 60.66, and they are providing resistance for now. So I'll say two-way price action, keeping an eye on the 5-minute chart because we're trying to push down through this value area. It'll be interesting to see what happens in terms of how price moves from here. I don't mind selling this even before the US Open. It does look attractive. It's starting to move lower, and the only thing to be aware of is we're getting this absorption going on. So if you notice that the delta is moving higher, right, even as the price is moving lower. So you can just see here this early absorption. So what's that telling you? It's telling you that even though price is moving lower, the delta is moving positive. So when you have price falling and the delta rising, it just means that passive sellers are stronger than aggressive buyers for now. There are aggressive buyers trying to compete, the passive sellers are stronger for now. But if those passive sellers capitulate, then you can expect that to move lower. And if the aggressive buyers, if they capitulate, then we can look for more upside. And if the passive sellers become more aggressive, then if the aggressive buyers get trapped, then price can move lower. So just be aware, we've got some absorption going on at the moment. Okay, you can see that going on. So we want to avoid longs really until we get a confirmation, and we want to look for buyers getting exhausted or trapped. Okay, so if these aggressive buyers get exhausted or trapped, then that's a good signal for potentially more downside. So I do like this 205 region. It's a bit close to the open, so I might just wait until the open. We'll see how price develops, but I want to see this. If they get some trap, those buyers get trapped there, you could see another flush back down to that 60.57, 60.58 region. Folks, CPI tomorrow. Everyone ready to know what to expect for CPI? Remember, the tradable opportunity will be if you get a very hot or a very weak print.
Seeing the latest WSB end stock data for wheat, that is 0.794 billion bushels. That's below the expected.
Thanks, everybody. Take care, and hopefully Paul will be back tomorrow as well, and he'll feel recovered. So look forward to seeing you all tomorrow in the post-CPI wave.
80 million above the expected 374.
Thanks, everybody.